Hello everyone, and welcome to this presentation of the correct way to trade pullbacks. Hello and welcome once again. My name is Primo. I am the president and founder of Specialist Trading, and we have a great free presentation for you today on specifically the right way and the wrong way in which to trade pullbacks. I'm going to show you a great technique if you are a pullback trader, or if you ever wanted to try to understand how to trade pullbacks. I'm going to show you something that really has a high probability for success. Well, a lot of great free information for you today, but before we begin, as always, we are required to show you this, so please take a moment to view our disclaimer. I'm going to show you some performance results with this particular technique, but please remember that we can in no way guarantee that any of the results I'm about to show you will be repeated in the future. So as you're taking, once again, a look at our disclaimer, also like to remind a lot of the new people that are new to my presentations, if you have any questions, please wait till the very end. We have a fairly good-sized crowd here today, and so it tends to slow down the actual webinar if we continue to ask questions and answer them asked. Many times, if you just wait till the next slide, your question will be answered. So if you have a question, just write it down. I promise I'll get to it at the very end of today's class. Also, before we begin, I want to invite each and every one of you to follow us on Twitter. That is our name right there. That's our handle, at SPCLSTTRADG. We have a lot of great free information that we post there from time to time, anything from daily thoughts of wisdom, trading wisdom, to actual signals that we are currently in. We gave a great signal, actually 3 signals last week on being long the market. We currently ended one of those in an E-mini gain of over 33 points. We also just recently posted a signal in the dollar-yen for all you Forex traders. So I invite each of you to follow us on Twitter. Now, as I stated earlier, we are going to give you a great presentation today and a lot of free information. And the reason I do this is because we are an educational company. We provide all of our members and students and all of our attendees that come to our presentations with some free information. So even if you decide not to become a member of Specialist Trading, we always want to leave you with something you can ponder, think on for your own trading benefit, or something that you can actually use. So we're not just here to market and sell you things and kind of leave you with your hands wide open and wondering like, well, what did I get out of this? We're going to give you some great information, and if you decide to come on board, we really appreciate it. And the reason why is because I struggled, just like many of you probably are, when I first started trading myself. I couldn't make a dime trading on my first year on the floor of the Pacific Stock Exchange. So it wasn't until I got to turn my way of trading around that I learned all of these things that got me on that road to consistency, and that's what I teach all of my members. I've been trading for 37 years. I started trading on the floor of the Pacific Stock Exchange, and I was on the floor for 16 years. 9 of those years I was a specialist, and some actual specialists on the floor, my mentors, were able to get my trading consistent. And so this is what my goal is. Once I started Specialist Trading, I wanted to teach the same things that were taught to me in order to teach the same specialist edge that got me on the road to consistency. So as a member, you're privy to all of the 37 plus years of information that I've accumulated, so hopefully it can get you on that road. Now, here's what you're going to learn today. I'm going to show you actually, and start off by this presentation showing you the wrong way to trade pullbacks, because this is the most reason why people give up trading pullbacks, because they're trading them incorrectly, and it's basically how we've been taught to trade. And then I'm going to share with you a simple but high probability technique for trading pullbacks in all markets and in all time frames. So it doesn't matter if you trade stocks, the Forex markets, it doesn't matter if you trade the currency pairs, it doesn't matter if you trade 5-minute time frame or a monthly time frame. This technique will work in any market, in any time frame, in any direction, and I will show you examples as current as today. All right, once again, if you happen to just join us, we're going to be talking about pullbacks today. This is being recorded, so I know a lot of you may have to leave early, or this isn't conducive to your best time of the day. I know we have people from all over the world here, so this will be recorded. You can request a link to the recording. And then lastly, if you have any questions, kindly wait till the end to ask. We have a question and answer box that I must open up in order to see your questions, so I won't even see them until the very end because I won't even open up the box. So just wait till the end to ask any questions. All right, so let's start out by showing you how most people trade pullbacks. Firstly, you need to be in some type of a trend, and this is an ideal situation. This is obviously not a real chart, but it's just basically showing you what an uptrend is. We have this kind of a stair-step approach, which leads us to go up. And conversely, it's the same thing, just upside down if we're looking for a downtrend. We have this kind of stair-step 2 steps forward, 1 step back, 2 steps back down to have us in this downtrend. So once that we've found out what the trend is, what we're looking for is to capture some type of a buy or a sell within these little sell-offs in an uptrend and these little rallies in a downtrend. So what we want to do is purchase somewhere around these levels, and once we purchase, then hopefully the trend will continue, because most trends are, as we said, this kind of stair-step approach. They'll go up for a bit, come down a little bit, and then go back up. So we want to purchase on these levels. Now, a lot of people look at different techniques, Fibonacci, retracements, support and level limits and things like of that nature, and they will work. And let's say the exact parameters are met, and as you can see in this example right here, it was a perfect example to go long. So you see what those parameters are, you follow the strategy or system that you're trading, and we meet those parameters once again. So you jump on in to buy. So you think that, well, the uptrend is going to continue, and most of the time you buy, and look what happens. It continues in the wrong direction. So you're stopped out, or you hold on for a long time, and you ultimately have a very large loss on your hand. This doesn't just work with uptrends, this will work with downtrends as well. You'll see a really nice scenario where everything fits perfectly, and you'll have this perfect scenario to go short on a downtrend, and you'll see that it does work. And then it happens once again, it meets all of the parameters, so whatever system or strategy you're trading, it meets all the parameters where you should be selling in this pullback scenario. So you sell once again, and this time it goes the opposite direction. It just keeps going and going the opposite direction, and you give everything back that you made on the first trade. And in fact, these are some of the most common ways in which people look for these types of pullbacks, support and resistance. This is very common in forex trading. A lot of people like to use this in stock trading as well. And so if we look at an ideal situation, support and resistance is just basically the same situation where you have a nice trend, but each time the trend stops, that's your so-called resistance, and each time we bottom out, that's your so-called support in a nice uptrend. So obviously what you want to be doing is, if you're in an uptrend, you want to be purchasing on the support. If you're in a downtrend where we're going the opposite direction, you want to be selling on the resistance. So if we look at a common chart here, this is just a generic chart just for educational purposes. We see here that we kind of match that scenario where we're going up, coming back lower, coming up, and now you say, well, we're in an uptrend, I want to purchase on support, which is obviously right here. So if we get down to this level, I'm going to buy at this basic support and purchase it. So we get there and we don't even stop. We continue to go lower and lower. So you go back to the drawing board, maybe you read the book or watch the webinar one more time and say, oh, I understand, I kind of got in too early. The actual support is right here. So this is where I should purchase it. Remember, it doesn't matter if this is a 5-minute chart or a monthly chart. It doesn't matter if this is a currency pair or IBM. It doesn't matter. This will happen in any market in any time frame. So you decide to purchase at this support level because you've gone back and done your homework again. You see that this is the major support. So you decide to double up right here, and guess what happens? Okay? Look familiar to anybody? See, the thing with support and resistance is that as so many techniques that we've been taught and we've gone to presentations and that we purchase, software, they will work until they don't work. And there's no consistency. Remember I told you that my mentors showed me how to be consistent. We're not just looking for home runs or something that works tremendously and has these very large gains. We're just working for something that works a majority of the time, that has high probabilities. And there's no consistency in this because it's a little bit too subjective. One trader's support is another trader's resistance. So here's another thing that people look for picking bottoms and tops when trading in pullback type of strategies, and that's Fibonacci levels. Very common. A lot of stock traders like to use this. Fibonacci levels are very common, but they're very difficult to figure out. One of the most common levels is basically 50% or half the retracement. Let me show you what I mean here. Once again, this is just a standard generic chart. Doesn't matter what time frame or what market we're looking at. But right off the bat, we are in some type of a downtrend. All right. So what we're looking for is that little bounce or rally in a downtrend telling us to get short. Now, a very common, very basic way to trade Fibonacci levels is to take from the top of that move to the bottom of that move, and then you just wait for it to bounce 62%. Okay, it's a very common Fibonacci level. So you get to that point here, and so you sell. You wait till price to move 62% from point A to point B, and you sell, and guess what? It works fantastic. And so at this point, you think you're going to be a millionaire by the end of the year because things are working great. You've studied your program that you purchased, or you're watching the webinar or reading the book. And so you go back to the well once more, and you see that, well, we had another move from this top to this bottom. So if we get back up to 62%, I'm going to sell again because we're still in a downtrend. So you wait for whatever you're trading to get there, and it does. So you sell again. This time it really doesn't go down. In fact, it goes up a little higher. And you start to read the book again, and you figure, well, 75% is also a very good place, and I've just made a really nice amount of money on the last trade, so I'll sell a little bit more at the 75% level. And you sell a little bit more, and nothing really happens. It goes higher, but then it comes back, and so you're still holding on to the trade until ultimately it really takes off and goes against you. All right, so once again, Fibonacci is a fine technique, just as support and resistance is. The only trouble is that only a few traders are able to actually master them. Why? Because they're extremely difficult to figure out. They're very subjective. Once again, just like support and resistance, one Fibonacci level for one trader means something to the next. We want things that are more cut and dry. That's why at Specialist Trading, we use things that are just very black and white. If it's a buy signal, everyone is going to see that it's a buy signal. If it's a sell signal, everyone will see a sell signal. There's no room for interpretation. So if we go back and look at our standard scenario here with uptrends and downtrends, we see that this is what usually happens. It worked great on the first scenario, but then when you get in, it doesn't work, either in an uptrend or a downtrend. So how can we have a correct pullback entry? Well, here's the rule. Entering a trade, firstly, based off support and resistance and or Fibonacci levels, is similar to picking tops and bottoms. Why? Because you're basically hoping that they're going to stop at those levels. These are extremely difficult techniques to master because they are very subjective, as I just stated. Some people do fantastically trading these techniques, but there are very few. So in order to have a high probability pullback entry, one must wait for confirmation that the pullback has concluded and that the market is headed back in your desired direction. So in other words, we don't want to just try and pick a bottom based off any support or a specific Fibonacci level, because we're basically hoping that it's going to stop right there. We don't want to do that. We want to wait till it gets to these levels and then confirm that it's going back in our direction. Here's what we mean by that. So here's our standard scenario once again. Here's the pullback that worked. Now we have another scenario. Now, rather than just simply place an order in here and hope that it's going to stop at this particular level, what you want to do is wait for some type of confirmation that it's heading back in your direction. See, when you see that confirmation, it's not 100% foolproof that it's going back up, but at least you have a little bit of the odds in your favor that, in other words, you may have confirmed that it's going back in your direction. So this is what you need, some type of confirmation, and many times if you purchase on that confirmation, you will get that high probability trade of the confirmation of going in the trend you want. Same thing with a downtrend. Most people will sell here and they figure, hey, it stopped exactly at that Fibonacci level, we'll try it again, but rather than just try to pick a top and say it's going to stop right there, we want to wait for a confirmation that we're heading back in our desired direction. In this case, it's going down. So we have some type of confirmation and we sell, and many times it will continue in that direction. Why? Because we had confirmation. Now, I know a lot of you are saying, well, what exactly is confirmation? Do I wait for it to go a point? Do I wait for a few ticks? What do you mean exactly by confirmation? Well, these are the three most common ways of confirming that the trend has continued in your direction. So when you're trying to buy on a pullback, rather than just simply place a limit order and hope it's going to stop there, wait for price to trade above the previous bar's high. So if you're going long on a pullback, wait for price to trade above the previous bar's high. This is a very common type of technique. We use this in a number of our strategies at Specialist Trading. So this is confirmation that you're going higher. Same thing if you're going shorter. Confirmation technique number one says just wait for a price to trade a little bit lower than the previous bar's low. This is most likely telling you that you're going lower. Another way to confirm this is through a candlestick pattern. Rather than just say, okay, I'm going to try and buy here, hopefully it's going to hold at this Fibonacci level, wait to see some type of candlestick pattern, that may be an engulfing pattern, maybe a harami, something that is telling you that the trend has stopped and that it's going to change to the direction you want it to go. Okay, now this is not a course in candlestick trading, so if you're not familiar with it, buy some books or go to some presentations and just look for specific patterns such as haramis or bullish engulfing that tell you that most likely we've reached some type of bottom or most likely we've reached some type of top in a pullback. And then lastly, a lot of people will look for an indicator. So maybe it's a short-term overbought, oversold type of momentum tool. But you want to wait and see that that indicator has given you the green light that it's okay, that the trend is most likely resumed in your direction. These are very common techniques if you're any type of a pullback trader. If you just apply these instead of just try to pick a standard top or a bottom, I can almost guarantee you, even though there's no such thing as guarantees in any of our courses, but I can really have a strong sense of high probability that you will increase your odds for success using any one of these types of confirmation. As I stated, we use a couple of these in our strategies that we have at Specialist Trading that do give us this high probability when we're looking for some type of a change in a trend that's given us confirmation to get in. So they're all valid, they're all good, and this is what you can start experimenting with as early as tomorrow. Now, when I say good, they're not the best. Why? Well, because the title of this presentation is the correct way to trade pullbacks. We feel there's actually an even better way. Now, if you use these three confirmation techniques, we feel that you're really going to increase your odds for success. But there's an even better way, in our opinion, the correct way to trade pullbacks specifically. How is that? It's by applying our proprietary tool, the PET-D, which is the Primo Early Trend Detector. Okay? It's a proprietary color bar algorithm. So what we do is we automatically color the bars to tell you what the short-term trend is. If you see a series of green bars, then automatically you know that the short-term trend is up. So this is a great confirmation telling you that you may have a sell-off to the downside, if this is your pullback, but once those bars turn green, that means the trend has turned back up. This is your confirmation. Same way if you see a series of red bars. Well, now we have a short-term confirmation that the trend is down. This is a technique that was taught to me on the floor of the exchange. The only problem was it's not difficult and it's not by any means complicated, but you have to figure it out by hand. So I was only able to use this on daily bars. Once we got the high-speed computers and with a lot of programmers' ability to put things together, we decided this past year to put this into a color bar algorithm. So here's how you would use it when trading pullbacks. If you're in an uptrend, from time to time you'll see a small amount of red bars. The red bars signal that we're in some type of short-term sell-off. That's your pullback. And so these a small amount of red bars will appear from time to time. But the next green bar that occurs is your confirmation for a buy entry. That's our confirmation. And this we feel is the best and the correct way to trade pullbacks. Let's look at an older example here for educational purposes in Facebook. As we see here, we're in an uptrend. According to our proprietary overall trend tool, we know that we're in an uptrend, all right? And the colors on the short-term trend identifier, here's the PET-D, are all green. So we're in a valid uptrend. But now we see a small series of red bars. That's okay. This is our pullback. We're waiting for that first green bar to appear, and it does right here. So this is our signal to jump in and to buy. This is our confirmation, and look what happened. Okay? You see how simple that is. Rather than try and pick a bottom, because we didn't know if Facebook was going to stop right here. It could have continued to go lower and lower and lower. So we want to wait for some type of high probability confirmation, which was the green bar. How about going short in a downtrend and trying to pick a pullback to the upside? Well, in a downtrend, a small amount of green bars will appear from time to time. This is just your pullback to the upside. But the next red bar that occurs is your confirmation to get in to go short or your confirmation for a sell entry. So if we look at this example here in the E-mini, an older example, we are in a downtrend according to our proprietary overall trend tool. So we're going lower, and then we have this bounce, which is our pullback. And now we have a series of green bars here. So we're just going to simply wait for that first red bar because we don't know if we're going to stop here or if we're going to continue and just start a brand new uptrend. Remember, from time to time, these Fibonacci levels and support and resistance will work, but when they don't, it's disastrous and the market just continues to go against us. So rather than try and pick a top say a 62% or 75% level, let's just wait for confirmation, which is the first red bar right here. So right there on that close of that 5-minute bar, that's telling you it's time to get in and to sell. And look what happened. Had a really nice move to the downside. And the best thing about using this technique on intraday bars is that you'll see a lot of these examples. Later on, just about 2 hours later, you get another bounce, followed by another red bar. That's your signal to get back in, and then you have another move to the downside. And you have even more along the way. So this is a great tool for trading pullbacks. Why? Because it gives you this tremendous confirmation. It gives you the confidence to get into the trade. So let's look at some recent stock and ETF examples using this, okay, using this technique. And remember, if you have any questions, kindly wait till the end because we want to just go over these examples. And I'm sure once you see a lot of these examples, you'll be able to answer them yourself through the slides. All right, here's a monthly chart for all you investors in Apple. Our overall trend tool is telling us that we are in an uptrend. Obviously, Apple's been going up for years, and we had this really nice run coming into July of 2012. And this is when the kiss of death was given it. It was the biggest company in the world, and it went straight down. But this was just a start of a pullback because we're still in an uptrend on a monthly basis. So that's okay. If we had gotten out of the stock, once these bars turned red, we would simply wait for a green bar. And now in July or August of 2013, we were signaled with a green bar. So this was our signal to get in that the pullback was most likely concluded or over. So roughly about 500 you could have purchased. You could have, if you're buying odd lots, if you're using this for your long-term portfolio, maybe options, but roughly at 500, Apple was signaling it's time to get back in. And look what happened. In fact, you've had two signals since then, and this is a current monthly chart of Apple. It's all the way already up 150 points roughly from where we gave the buy signal. Now that's at a monthly time frame. What if we look at the same chart on a daily time frame? We'll just go back a month. Apple has obviously, if you look at the chart, been in an uptrend for the past couple of months. So we have this series of red bars followed by the first green bar right here. So that was your buy signal, and look what happened. Now we have another sell-off. Here's our red bar followed by the first green bar and two more signals to go long. This is a current chart that was taken up until yesterday, I believe. And so you see how simple it is using this for the pullbacks. Rather than, just hopefully putting in a limit saying, well, I think the Fibonacci support is right here, so I'll place my limit. You don't have to worry about that. All you have to do is wait for the bars to turn in your desired direction. In this case, we want it to be green, so the first green bar was your signal to go long again. How about TGT? All right, this is a current chart. Once again, this is obviously has been in a downtrend. If you look at TGT, we've been in a downtrend for a while. All right, so we have a sell-off followed by a nice little bounce, and this is our pullback. Now, rather than just try and place a limit or hope that it stops at some level, we wait for the first red bar, which happened roughly just about a month ago, or actually it wasn't even a month ago. It was on the 13th or 14th, which was just a week or two ago. So this is your signal to enter, roughly about 59, 59 and a half, and look what happened. Okay, the trend resumed to the downside. Why? Well, because you got the signal and the confirmation coming from the PET-D. How about the spiders? Okay, we look at the spiders, that overall ETF telling you what the S&P 500 is doing in a stock, and we've been in an overall uptrend, as you can see. And every time we had one of these little sell-offs here, you could have purchased on a daily basis. But where exactly do you purchase? Well, you just simply wait for the first green bar, and these were all signals to get in if you were trading the spiders. Remember, you could have used this as an indicator to tell you what the S&P 500 was doing as well. If you want to look at a weekly basis, you can go even longer term. We're obviously in an uptrend on a weekly basis. We've had all these nice little pullbacks, as you can see, pullbacks happening here and there. Where do you get in? Well, you get in on the first green bar that follows a red bar. So look at all these areas where you could have purchased the spiders on a weekly basis, or you could have used this as a some type of entry tool to get back into the market in your particular stock or buying options or whatever way you wanted to use it for trading. Twitter has been in a sustained downward move for a while, for the past couple of months. Okay, we don't care why. We're not interested in the news. We don't care about the value of the company. All we're interested in is, trading within the direction of the current market. So on a daily basis, we are going lower. So if we're going lower, we don't want to buy. All we want to do is go along with the sell-off, which is meaning to sell. But we want to sell on pullbacks, these little bounces. So where do we get in on the pullback? Well, we simply look for the first red bar to appear after a green bar. And look at all these areas right here. Wouldn't you have loved to have gone short Twitter at these levels? Had you even taken the first one here, you could have gotten in right at the top. You see this pullback here. We have a couple of green bars. The first red bar is your signal to get in roughly about 55, and you could have ridden it all the way down to 30 if you wanted to, if you were so inclined. But you had a number of other signals to get in, and this was a chart from yesterday. As you can see, yesterday we had a nice bounce signaling the PET-D telling us that we have a short-term move to the upside. Now, we're still in a overall downward trend, so we're not interested in buying. We're only interested in waiting to see, wait for the first red bar to occur again because we're going to short Twitter. And then lastly, we can use this on commodities. Here's the chart on the crude oil. Here's the overnight chart on crude oil. As you can see here, we've been in a nice uptrend, and we've had some nice sell-offs, some nice pullbacks. How could we use this tool to get us in? We simply wait for the first green bar. And look at all these areas you could have purchased crude oil on the overnight contract. Okay, so those are stocks and ETFs and an actual commodity. Let's look at some E-mini S&P examples. Okay, so we're looking at, we looked at, longer time frames such as daily and monthly and weekly. Let's look at some smaller intraday time frames. Let's start off with a 30-minute chart. We see here, this is current up until yesterday. We've been in a nice uptrend on a 30-minute time frame. We've had some series of small sell-offs here and there. How could we have used the PET-D tool to get us in? Well, we simply wait for the first green bar to appear after a red bar. And look at how you could have gotten in here roughly about 1893 and made a good 10 points to the upside in the last couple of days. How about a 10-minute chart? Well, this is going back last week on the 21st of May, last Wednesday. Obviously, we were in an uptrend. We gapped up. All right, we had a nice move up, and then here's the pullback right here. We started getting some red bars. Now, this doesn't tell us to sell because the overall trend is up. So we're not interested in selling. Plus, we're not interested in putting a limit order and just hoping and praying that it stops here and doesn't come all the way down and fill the gap. We're not interested in trying to pick bottoms when we trade. We're interested in having some confirmation. How do we get confirmation? Well, on this 10-minute time frame, we're looking for the first green bar, which appeared right here, roughly at 9:30 Pacific time. So roughly we were at 1880 on the S&P. We could have jumped in right there. That's our buy signal, and look what happened. How about a range bar? I know a lot of people try to trade range bars with the E-mini. Well, here's a 2-point range bar. Each one of these bars is equal to 2 points on the E-mini. All right. Now this is going back once again from the 21st, from last Wednesday, all the way up until today, up until about noon today, an hour or two ago. I took this chart. So we have a number of sell-offs, a number of pullbacks in this really nice uptrend we have. But how do we know when to get in? Well, we simply wait for the first green bar that appears after a series of red bars. And look at all these nice buy signals you could have all the way. Now I have one here that's in red because if you were a conservative trader, you would have purchased here and most likely would have gotten stopped out. But that's okay. It was followed by another confirmation to get in, and you could have made all the money back. Now, this is just showing you that these methods are consistent. We're not going to sit here and cherry pick and say that everyone works fantastic all the time. Sometimes you do have losses, but they're small and minimal, and you can quickly make them back with another setup along the way. This is a current chart up until about an hour or two ago on the E-mini on a range bar. Let's say you're trading a 15-minute time frame. Well, this was today. Okay, this is coming in today on a 15-minute time frame in the E-mini. Our overall trend identifier says that the overall trend is up. So we know we're only looking to go long if the overall trend is up. So we have to wait for some type of setup if we're a pullback trader. Here's our first series of red bars. So this is telling us to get ready. On the very first green bar we see, we're going to probably jump in and go long. Well, here's the first green bar that occurred about 7:45 Pacific time this morning. So this was your signal to go long using this PET-D tool. Could have purchased roughly around 1911, and we all know what happened with the market today. As you see, the remainder of the bars stayed green for the entire day using the PET-D. The PET-D was telling us overall we are in a short-term uptrend. So there's no reason to go short because the short-term uptrend is up. Even at this time here, when I'm sure it got very slow during the day today, and a lot of people were saying, well, we're probably topping out, we're probably going to go much lower. The PET-D was telling us, nope, we're going higher. Why? Because all the bars remained green all day today. So this snapshot was taken up until about a half an hour before the close, as you can see here, 12:30 Pacific time. And lastly, let's go over some Forex examples for you people who like to trade the currency pairs. Here's a downward chart, a current chart on the Canadian dollar. We're in an overall downtrend. So how will we go short? Well, we look for the first bar after a series of green bars that is colored red. And we have two really good scenarios here to go short. If we want to go on a 4-hour time frame, we have the Swiss franc here. Obviously, we're in an uptrend. We have a couple of nice pullbacks. How do we take advantage of that? We look for the first green bar, telling us to go long. And as you can see here, the first green bar gave us this nice confirmation that we're going higher. And then lastly, if you want to be a long-term investor, you can look at a weekly chart of the British pound, which has been pretty much for the last year or so going straight up. How could we have taken advantage of this in hindsight? Well, we have a couple of nice pullbacks here, and all we have to do is wait for the first green bar after the red bar. And look at how we could have taken advantage of that. Now, these are weekly bars. Had you taken each of these signals, just purchased at the close of these weekly bars, we're talking about thousands and thousands of dollars just trading one lot of gains here. Now, I want to show you, before we conclude today with some questions, a current setup. This is something that is actually happening right now, and we won't know if it's valid until the close of tomorrow because it is a weekly setup on the IWM, which is the ETF of the Russell 2000 index. So this is telling you what may be happening in the Russell 2000, and that's 2,000 stocks, of very high quality stocks, which would give a great sign of what the market is going to be doing. Obviously, looking back over the past year, we've been in an uptrend in IWM, okay? And we've had a couple of really nice pullback signals. Here was a pullback going back to past September, and we had a red bar followed by the first green bar, and you could have purchased roughly around 102, 103, and we all went up a nice 10 points after that. Then we had another sell-off here in February of this past year, followed by our first green bar, and we had another nice run-up. But now currently we have been in a sell-off. We have been in all red bars here for the past 2 months or so on a weekly basis in IWM, the ETF of the Russell 2000, up until this past week. Now, this past week, guess what? We had the first weekly bar which colored green. And what does that mean? If we are in an overall uptrend, after the first series of red bars, the first green bar that appears is your signal to jump in and go long. It's confirmation, most likely, that the sell-off or the pullback has concluded. So this is something you may want to watch in IWM on a weekly time frame. If this is a good signal, this is telling you for the next month or two, we're going to have a nice upward move probably in the markets. So this is a very high probability signal that you may want to watch, and hopefully you can take advantage of. All right, so let's recap. We showed you a simple but high probability technique for trading pullbacks in all markets. But points to remember, this is not a complete strategy. I really didn't tell you where to enter. I didn't really talk at all about stop placement. I mean, I'm not going to sit here and tell you that every trade works. We showed you a couple of them that didn't work. So where would you place your stop? We don't want to hold on too long and have a small loss turn into a very large loss. How about advanced entry signals, about entering so you can give yourself an even better entry, or advanced exits? We didn't talk at all about where to get out, okay? And then lastly, money management. How many shares, how many lots, how many contracts should you be trading? These are all things that you need to know in order to trade with a high probability or with a specialist edge. You can't just jump in and say, well, I understand this concept now. I know confirmation. I'll just buy at the market and just hope it goes my direction. You have to have these other pieces of the puzzle. Stop placement, entries, exits. You have to have all of that with money management to give you an even higher edge. So many traders just think that they have it all just because they have an entry or a technique that seems to have worked over time, but it's incomplete because they don't have the complete package. If I can just spend the last couple of seconds talking to you about a great deal we have now for all the attendees. This is the PET-D tool, which we went over today, accompanied with probably one of our most consistent strategies, which is strategy number 4. Now here it says E-mini strategy number 4 in the graphic, but actually it works in any market. It works in virtually stocks, forex, currency pairs, and any time frame and direction. That's how consistent and how well this method transfers over into any market. It comes complete with everything, with all entries, exits, and stops. Also, we provide you with signal alerts. So you'll have little arrows appear when there is a signal and when there is a sell signal or buy signal. This is as well a pullback as well as a continuation technique. In fact, let me show you some examples, some current examples, and how you can apply this with the PET-D in conjunction. These are actual daily signals in UPS going this past month using strategy number 4. As you can see, all of these arrows here denote when a signal was generated. Okay, we had the 4 all together going back in April and in the first week of May. Now, 3 of them were winners. Obviously, this one was a loser. If you would have purchased anywhere around here, you would have gotten stopped out. But these all 3 turned out to be ultimately winners. Now, how can we use the PET-D to increase our odds for success even more with this strategy? Remember, this is just strategy number 4 with nothing else applied to it. Well, what we've done is once you apply the PET-D, what we want to do is make sure that the day you receive the signal to go long or short, that the PET-D is coinciding with that. In other words, if you get a buy signal on a particular day, that day should be colored green. If you get a sell signal on a particular day, that day should be colored red. So if we look here, and once we've applied the PET-D, we see here that all these buy signals were colored green, so they were all confirmed, except for this one. This buy signal with strategy number 4 was colored red, so you never would have taken this. If you were being conservative and applying the PET-D, you would have never taken the signal, and therefore you would have missed out and not had to lose the money on this particular trade. So this is the beauty of applying the PET-D, and you can apply the PET-D actually to any strategy. Whether it's one of mine or yours, the PET-D will increase your odds for success. Now, we've given you a great strategy, strategy number 4, which is high probability in itself, along with the PET-D. Now, I know what a lot of people will say is they'll say, well, Steve, I kind of understand the concept. You gave me a lot of great free information. I don't really need strategy 4. All I need is kind of what you shared with me today, and so I can kind of figure it out for myself. And this is what most students will do. They don't want to spend the money or the time learning to use these techniques because they think they have it after coming to one of my presentations. As, for example, in this example of IWM. Now, obviously, we're in an uptrend. And what a lot of people would say was, well, you know, we were kind of come down, and I see that we're close towards the top. So that's probably my first green bar on the PET-D. Most likely, one of these or 2 of these bars turn red. My first green bar, since we look like we're having some type of reversal, that's where we turn green. So I'm going to guess that's the first green bar for the PET-D. So I'll jump in there and buy, and then look what happens. Okay, you went up for one day, but then you went straight down. And most likely, here's where you got stopped out, and you said, boy, did I get in something wrong? This doesn't work. So you would have stopped yourself out and lost 2 or 3 points and taken a little loss there. Had you applied the PET-D, as you would have seen here, all these bars continued to be green. So we want to wait for that pullback. The pullback here was the first of 3 red bars here, and then we started to have more, and then ultimately we have our first green bar. So this was your signal to get in. Okay? Remember, if you're going long on a pullback, it's the first green bar after a series of red bars. So that was your signal to go long. You would have bypassed this signal altogether and gotten in and purchased, and then look what happened. So I can't really stress enough how valuable the PET-D is, working either with one of our best strategies, with the strategy number 4, or with one of your own personal strategies. It's a fantastic tool that complements any other strategy, and strategy number 4 in and of itself is a great strategy to have as well. Strategy number 4 can be used in intraday, it can be used in currency pairs, it can be used in stocks. It's that good of a strategy. So this is a special 2-for-1 attendee special. This would normally cost you thousands of dollars. We reduced it down to $19.95, but once again, we reduced it even more down to $14.95. The best thing about this combo deal is that we have payment plans available. So $14.95 is still a little bit too much for you to put together for one payment. Our trading consultants will work with you, or we can put it together so you can pay monthly so that you'll be able to be using these techniques as early as tomorrow. So once again, you get instant course access. You can be getting all the rules and all the information as early as this afternoon. That's detailed instruction, 5 videos. We teach you entries, exits, and stops. You get the signal alerts, so you'll get all that information provided to you, weekly video trading lessons. And remember, this includes the both add-ons. So by add-on, we mean the up arrows and the down arrows for strategy number 4 and the colored bar for the Pet D. This includes all of that. And then lastly, access to my personal email. You can contact me whenever you'd like, ask me a question if you're not sure about how to apply something, and I'll get back to you as soon as possible. Remember, if you bought these separately, it would run you upwards of thousands of dollars. We've reduced it down to $19.95, and then the special I believe a 2-day limited offer down to $14.95 with payment plans. So for more information, here's how to contact us. Pro Trader Strategies is our sister site, and they handle all of our selling of all of our individual strategies and techniques. You can contact any of the trading consultants at trading@protraderstrategies.com or call them directly at area code 310-598-6677. Okay, I'm going to leave that information up there on the screen just for you to copy down. And while I do, I will open up the question and answer box for all of you. If you have any questions, I want to thank you so much for holding off. And let me just go to these presentations really quickly. Hemant Kumar from India. Hello, Hemant. He's a great student of ours. He's in the class, and he wanted to know if this works on the Indian markets. Yes, Hemant, this will work on any market that has a trend, because all trends are the same, meaning that they are like 2 steps forward, 1 step back. In other words, they're a stair-step type of approach. So if your markets trend at all, then yes, there will be pullbacks, because there are always pullbacks within a trend. It's just human nature. It's just, you know, people coming, and if the trend is up, people deciding to sell because they want to get out, and it has a small little pullback in whatever you're trading, but then usually the buyers will come back in and take advantage of lower prices. So yes, this will work in any market and in any time frame. Let me see here. Let me go down. This web is not how to recognize pullbacks, but how to buy your expensive Pet D. Well, actually, Lorak, not really, because if you recall, in the very first portion of this presentation, I showed you 3 great techniques for confirmation. Remember, we went over purchase if something trades 1 tick above the previous bar's high. So that's a great piece of information. In fact, that's included in many of our strategies. Another piece number 2, was candlestick formation. Most people don't utilize candlestick formations this way. What they'll do is try to pick a top or a bottom, and this is usually a recipe for disaster because they're out of sync with the trend. But if you're trying to pick a bottom in an uptrend, that's most likely a pullback that's concluded. So this is a great piece of information as well. And then lastly, an indicator. A lot of people, you know, don't rely on indicators for any type of confirmation for a pullback. Once again, they'll use them just for tops or bottoms. So no, we gave you some great free information that you can use even if you decide not to come on board with the Pet D. Let's see, next question is, where do we get out? Target, stops. Rob, that's a great question, but unfortunately, remember, that's all included in the course. We can't give away everything because, once again, if you know, it wouldn't be fair to the people who spent close to $3,000 who purchased all this information. We've reduced it nearly in half. So it's you know, it's the type of thing where we just can't give all of that away. Okay. Let's see. Can we just get the Pet D tool, Roxanne? Yes, Roxanne, you can. I mean, you would have to talk to our trading consultants because this is a really deep discount for both of these. They can still just, you know, you can do that, but I don't know if there's a current discount available for the Pet D. You'd have to contact them, but they'll be able to work with you even with having some type of a, if you want to have some type of a payment plan. So yes, you can purchase it separately. Tony says, thank you, good presentation. You're welcome, Tony. I only trade futures and I never hold overnight. When determining trend direction, when trending on a very fast chart, do you use a long time frame chart to determine the trend? That's a good question, Tony. No, we don't. We have a proprietary overall trend tool which just looks at that current chart. So and this is the way I trade. If you're trading a 5-minute chart, then you only look at the 5-minute. That's it, and you'll know what you know what the trend is for that chart. If you're trading a daily bar chart, then you only look at that particular chart. But we don't look at a higher time frame to validate what the lower time frame is. Okay, we only look at that particular chart. It makes it so much more easier. So many times, if you wait for the higher time frame to be validated by the lower, you'll miss some great trades because they're not in sync. So because of that, we only look at the chart we're trading. Okay, you may want to try that. Another great bit of information there for free that hopefully can help you. Roger asks, why do you prefer using bar charts versus candles? I don't, Roger. In fact, I look at candles all the time, but candles are just a specific way to look. What I'm looking for are patterns in price, and trends. And so I don't need a candlestick to tell me what the trend is. I'm looking, basically, we have an overall trend identifier, and then we look for pullbacks. You'll see the same pullback in a candle as opposed to a regular chart. So it doesn't really matter. We have strategies that are built off candlesticks. One of our best strategies, strategy number 5 for Forex, and that transfers over to stocks and E-mini markets too. So we do use candlesticks, but please remember that candlesticks are just a way of viewing the bar. We're not concerned so much with a way of viewing the bar. If the bar closes at the top of its range, it's going to close at the top of its range if it's an open, high, low, close bar or a candlestick. So it doesn't matter. We're just really concerned with looking at some pattern recognition within the last time frame. So it doesn't really matter. But candlesticks are perfectly admissible. I use candlesticks all the time. Okay. I hope that answers your question. Will the indicator work using Renko? That's a very good question, Tony. And you know what, Tony? I don't know. I don't use Renko. That is one thing I don't use. We have some members that do use it, but I've never really applied it to that. I have traded with Renko in the past. It didn't seem to work with a lot of my different strategy setups, but I never had it applied with the PET-T. So I'm really sorry. If if you want to contact any one of our trading consultants and see if perhaps they have some members that trade it with Renko, but I personally don't use it. Roxanne asks, have we given the indicator PET-D to any software like TradeStation? I see you have the answer there. Yes, we have it for TradeStation. We also have it for NinjaTrader, MT4, and Metastock. So if you become a member, you'll get the add-on, meaning the up and down arrows as well as the color bar with any one of those 4 major charting platforms. So if you have TradeStation, Metastock, MT4, or NinjaTrader, this applies perfectly to it. Okay. Let's see, what else do we have here? Ron asked, you mentioned an overall trend indicator. Is that another tool included? Yes, all of that is included in the course. Once you purchase the course, we're not going to say, well, in order to trade these pullbacks, by the way, you have to purchase one more. No, it's all included. I just don't want to give everything away for free here. I've given you some great information that you can start using, and if I give away everything, it's not fair to the people, once again, who have spent thousands of dollars, much more than the $14.95, which we're having it discounted for. But yes, everything is included. Don't worry, we're not going to make you pay it for an upgrade in order to we're not that type of company. We're traders first, and we basically, you see what you get. We're giving you all the information, everything included. Let's see, Roxanne asks, works well on a 5-minute time frame for day trade. Yes, Roxanne, I showed you a 5-minute chart, and I also showed you a range bar. I showed you a 15-minute chart. Yes, I was using it today on a 5-minute chart. But remember, it has to be in a trending market. Now, we have other strategies that work better with not so much of trending available, but that's where the beauty of strategy number 4. Strategy number 4 can work in a trending market as a pullback type of methodology, but it can also work as a continuation type of trade. So that works well. That's the beauty of this combo we're offering, because even if you don't have a pullback, many times you'll see a strategy number 4 setup, which is a proper setup. So it's a great strategy in itself. Okay. Ron asks, what time frame is the sweet spot? In other words, the highest probability time frame with your tools. Ron, in my 37 years of trading, there is no such thing as the perfect time frame. Why? Because everyone is different, and this is the philosophy of specialist trading. We try to give you all the tools, the tips, and techniques that will better your trading, but we want them to fit your persona. Because I have traders who swear that a 5-minute is the best time frame. I have other members and students who swear that a weekly is the best time frame. Why is it the best time frame? Because it's the best time frame for them. It's the one that makes them not the most money or the most gains, but the most comfortable in trading. And whatever you're trading, I don't care if you get 100 trades in a row that are all winners. If you don't feel comfortable trading that time frame, you won't make money because you'll be out of sync with your persona. You can't trade, say, that fast, or you can't trade that slow. So if we could look forward in the future and see that this particular time frame will make you billions of dollars, but if it's out of sync, in my opinion, with your trading style, it doesn't matter. So what we teach is how to find your own time frame, your own method which works best for you, and then have you stick with that, because that ultimately is what's going to make you consistent. I've mentored and taught so many students, and that's why we don't have trading rooms or chat rooms, because students tend to look at those as a crutch, and they think, I've got to trade the exact same way. That's really, in my opinion, a recipe for disaster, because no one trades the same way. We give you a basic foundation with these strategies and basic tools, but then you can decide to trade conservatively. We teach you how to do that. You can trade aggressively. Many traders will say, you know what, I don't want to take this trade. It just doesn't feel right. That's fine. Or another one is more aggressive and say, I'm taking the same trade. It's up to you, but we give you everyone the same format, but then we mold it to fit your needs. So having said that, in my opinion, there's no such thing as a perfect time frame. There really isn't. Hussam is asking, is there a trial period? No, Hussam, that we don't give out trial periods, because you're getting 37 years of consistent trading methods and things that I've accumulated that I currently use. Everything I teach, I currently use in my own trading, and it's just our word is basically our trial, our guarantee that we really back this. We're not guaranteeing that anyone's going to be a millionaire, but it's our word that we really feel strongly about our material, and we don't just want to give it away for free and then have someone copy it or have someone sell it on their own. So these are really valuable techniques that we currently all use, and that we're hoping that you can come along board. One of the things we do say is that once you're a member, it's not like you have a 3-month time period to ask me questions and then it's over. You're basically my student for life. So anytime you have a question, regardless if it's one of my techniques or just something that you have an idea about, I'm always there for you, okay? Let's see here. Peter's asking, do we need the PET D if the up bars are green and down bars are red? Well, for this particular technique, I mean, if you are looking for a pullback technique, you want to look for those red bars, and that's telling you to get ready, because the very first green bar is your entry signal to get in. So yes, you do need those. I'm not sure, maybe I understand the question correctly, but if you are in a short-term uptrend, the bars will turn green, regardless if you use candlesticks, regardless if you use open, high, low, close charts. It doesn't matter, just the bars will turn green. If you're in a short-term downtrend, the bars will turn red. So these are all great indicators for the short-term trend. So we show you ways in which to use those and implement so you can increase your odds for success. How do I PM someone here? Well, if you're thinking about if you mean phone or contact someone, you can call us directly at 598-6677 or email us. You see right here. All the information on your screen is how you can contact us. Okay. Ralph is asking, so you prefer not to trade with time charts, rather range, for example? No, I showed examples. I showed a 15-minute time frame. I showed a daily. I showed a weekly. I showed a 5-minute time frame. So I trade all of these. I trade all these different. I'm looking for the best setups, and I trade candlesticks. I trade range bars. I trade open, high, low, close bars. I trade 15-minute. Remember, we're just looking for a high probability setup, which I can see right off the bat since I've been trading for this long, and this is what we try to teach you, so you can find those ones that you feel comfortable with and then take the signal. Okay. Tony asks, seems to me that if it takes 5 training videos to learn this, there must be a ton of rules and not just buying in the next red or green bar. Well, actually, no, you're getting a ton of information. It's not rules. The rules are probably no more than 5 rules on how to trade strategy number 5. What we've given you is just a ton of great information, because in the PET D, you get actually 4 different techniques on how to trade it. So we're sharing with you 4 other ones. We just shared with you a pullback technique right there. We have 3 other ones. We have another pullback technique as well as 2 other techniques which are more for some type of a stop and pause and then a continuation. So actually you're getting a lot more free great information on how to trade. So we throw in a lot of great stuff and decide, and you can decide for yourself. It's not complicated. In other words, where this whole entire thing I just went over with you is in 5 separate videos. We're giving you a lot of great information. I think most people, when you purchase something from another educator, that's it. You're just purchasing what they talked about in the course. We're giving you a ton more, probably 4 more trading techniques, along with stop placement techniques, along with advanced entries and exits, all things for you to learn and use. So it's really actually just a ton more information. What's the difference between tick charts and TF charts, in your opinion? Tick charts, I'm not sure what you mean by TF, Laura. If you can define that, TF, when you say, I'm not sure what you mean by TF. Let's go to the next question. Will the PET-D system, do we wait for the close of the green bar to go long after a red bar, so we'd actually be getting in on the very next bar after the confirming green bar? That's one of the ways of entry, Roger. Roger's basically saying, we have to wait for the close of that green bar. Do we simply get in on the next one? You can do that. This is what we teach in the course. Once again, we have different advanced entries. We have your basic entries, and we have advanced entries. It's all up to you. All you know is that once you start seeing it turn green, you have confirmation. So how you get in is up to you. That's where the difference comes in and what type of a trader you are. Some people say, you know what, I'm going to get in right now. I'm going to get at the close. Other people will say, I'm going to wait the next day. Other people will say, I'm going to wait for it to trade higher than the previous day. Other people will wait and say, well, I want to wait until I see a candlestick with green bars. It's up to you. There are a lot of different ways to trade this, but we just want to make you feel comfortable. Alex is asking, what are your other products? Well, we have tons of other products. We have upwards of 10 different trading strategies for all markets. If you see there, you can go to our website, which markets all of our different strategies at protraderstrategies.com. Peter is asking, does your volume play any role in the PET-D system? No, it doesn't. We don't look at volume at all. All I can tell you is that it's a proprietary tool which is based off of momentum. Okay, it's not complicated. It just takes some time to work out, and there's no way you could trade intraday if you had to work it out. So that's why we had a programmer program it and develop the PET-D into an actual color bar algorithm, and this is what's so much easier now to differentiate whether you're in a short-term uptrend or a short-term downtrend. You don't have to calculate at the end of each bar. You'd be calculating all day long. So now it's right there for you. But it's not based off of volume. It's not based off of any type of weird algorithm or based off the moon or pivot points. It's not that at all. It's just based off of momentum. That's about the most I can give you at this point. Rajani Saran says, many thanks. You are more than welcome. Landon is asking about the recording. Yes, this is being recorded, but please, if you're having trouble with contacting that, all you have to do is just simply email us or send in a phone call, and we can send you the link to that. Roger says, I've seen this presentation before, and it's very interesting. Thank you, Roger. The special includes the PET-D and trading the E-minis. Do you have a special deal for trading Forex and also the stocks? Yes, Roger, we have a lot of different things. Our current special is the PET-D and strategy number 4, but please remember, even though that graphic may say E-mini 4, strategy number 4 is a great strategy that works in any market and any time frame. We just had a current signal with strategy number 4, I believe in the British pound, that had some really nice gains in it, just basically using the same rules you would use with the E-mini or with stocks. But if you contact any of the trading consultants, they can share with you a lot of the things we have for Forex. Our most consistent strategy for Forex is strategy number 5, which is a candlestick strategy. We also have strategy number 6. We have a lot of different things available, so it's up to you, but contact them. Currently, the PET-D, though, works with virtually any market and any time frame. So I use the PET-D with one of the techniques we share in the course with all of the Forex markets. It works fantastic. And this is one of the things you get in the course, which I believe someone was saying, boy, there must be a lot of rules. No, this is just another free technique we give you on how to trade with the PET-D. If you want, you can use this, and it works great with the Forex markets. Okay, we are just about the end of the hour. I want to thank you all so much for joining us today. If you have any questions, please contact our trading consultants. Remember, if you want to take advantage of this great deal, you have to do this in the next couple of days. because the price goes back up to $19.95. Also, we're currently giving you payment plans. So we understand if it's tough to meet that $14.95 right off the bat, you can work something out with us. Anything different for each and every person, each and every trader. We know you have different needs and different schedules, so we can work something out with each and every one of you with a payment plan. But you must take advantage of that soon to get that special low price. Here's the information if you want to contact us. Thank you so much for joining us today. We'll see you next week with another great free presentation. Bye-bye.